India, and welcome back to the 14th edition of Digital Money Innovation to Scale, organized by Payments Council of India. This edition has been focusing on how innovation enables payment stakeholders to organically scale up digital payments while ensuring that existing operations perform consistently and sustainably. Before we begin, I would like to quickly thank our partners, our title partner Lyra, our powered by partner PhonePe, our brought to you by partner WhatsApp, our digital collections partner EaseBus, our platinum partners Freshworks and MasterCard, our session partners Switch by Open and PayPal, our gold partners Visa and Refinitiv, and our knowledge partner PwC. Without further ado, it is my pleasure to introduce to you our next session. This session is a very special panel discussion on India-Singapore Pact, a catalyst for cross-border payments. And for the same, I would like to welcome our esteemed panelists, our moderator, Ms. Geetika Raheja, Director, Payments Transformation, PwC, India. We welcome you, Geetika.
Thanks so much, Garima.
Thank you. Along with our other esteemed panelists, Mr. Shekhar Bhandari, Head Global Transaction Banking, Kotak Bank, Ms. Rashmi Satpute, India Country Manager, WISE, Mr. Dharmesh C. Desai, EVP Head NRI Business and Global Payments, IndusInd Bank. He will be joining us shortly. And Mr. Divyesh Dalal, India Head Global Transaction Services, DBS Bank. Thank you to all our panelists for being a part of this session today. I would request all the delegates to keep posting their questions in the chat box on the right-hand side, and the panel will definitely address these questions at the end of the session. I would now request Geetika to please take it over.
Thanks, Garima. Hi, everyone. Good afternoon. Thank you for joining us for this session where we are looking to discuss the India-Singapore Pact for cross-border payments, as well as the overall cross-border payments landscape and how it's evolving. In September this year, RBI and Monetary Authority of Singapore entered into a pact to basically enable instant payments across the two countries. This will be possible by linking the faster payment platforms of the two countries. Now, India, as we know it, is the largest recipient of inward remittances at about $87 billion. Singapore contributes about $1 billion to that. From an outward perspective, 2020 saw an outflow of about $7 to $8 billion. Now, with that as the background, let's see if these kind of bilateral tie-ups, like the one that has been set with Singapore, can enable a revolution in the entire cross-border payment space. Now, for that, we have a great set of panelists, perfectly experienced in this space, to basically comment on how this can change the landscape, as well as how do we see other innovations that are evolving in this space, right? So let's get started. So Shekhar, just to hear from you, what do you think? While the announcement has been made from a background perspective, what are some of the behind the scene activities that need to be done before something like this can be made seamless between countries?
Thanks, Geetika, and pleasure to be over here. I generally start with the Payment System Vision 2021, which was a vision statement to empower every Indian with access to a bouquet of e-payments options, which are safe, secure, quick, convenient, and affordable. And cash and a less card society. That means you need to have innovative ways, new ways of having customer experience and enable an ecosystem which is around it. I think a review of corridors and charges for inbound cross-border remittances was also a part of the payment system vision of 2021. And I think same thing was there for MAS, if I were to say. And when you see the two parts which are going into the entire pact, you know that I think remittances play a crucial role for especially developing economies, and have significant welfare implications. The cost of remitting funds is high, and the whole objective is to address the cost part, convenience, along with retaining, I think, the safety and the security. The D20, I think they had prioritized the issue of cost of remittances in its agenda as well. And according to, I think the whole objective was that facilitate the appointment of intermediaries, money transfer agents, um, create more official channels of cross-border remittances, receipt of foreign inward remittances, or even I think MTSS, which is money transfer service schemes. All this put together, I generally call is the two frameworks in India and Singapore, UPI, United Payment Interface in India, and Pay Now. And according to me, if you were to have these parts, the objective is to create an easy to use guide for the users, ensure that the cost remains in control, or I think bare minimal, if not zero, promote the linkage amongst the Indians staying in Singapore, and to prevent them for being exploited by other non-secure channels on the overall part. A great thought, a good start, and I'm happy that an anchor trade, travel, remittances flow will complement, I think, once this corridor starts with normal remittances.
Thanks, Shekhar, for those views. So that's the banker's view there. Rashmi, I wanted to hear a non-banker, a fintech perspective on how you can look to leverage some of these developments which are happening.
Thanks, Geetika. And good afternoon to everyone. Happy to be here. Maybe just taking on what Shekhar was talking about, right? And kind of taking a step back and introducing how Wiser's mission also has been for the last decade or so that we've been here. Our mission has been to ensure that cross-border payments become more faster, cost-effective, and convenient for the end customer. Right? That's always been our mission, and it has been in line with, let's say, the UN's sustainable development goal of reducing cross-border remittances prices, right? Again, which goes back to what Shekhar was saying, is the RBI's vision, is the MAS's vision, it's also the vision of the G20. So I think we have, in the last decade or so, tried to build our own infrastructure to ensure that cross-border payments become much more cheaper, faster, and convenient for the end customer, right? And for that, to that effect, we have gone and built our own network. However, having said all of this, I think um, our view always has been that this is an ecosystem play, right? So even Wise, when we have built our network, we've always worked with the ecosystem to ensure that remittances become much more affordable to the end customer. So to that effect, we think that this is a great step for the ecosystem to now kind of come closer to that mission of ensuring that customers have a cost-effective channel of transfer and a faster channel of doing remittances. So we think this is a great first step. Having said that, I think there are still a lot of operational details that we have to figure out as to how this will be operationalized, which I think becomes only a reality, I think, mid next year, as to what would be the customer limits, if at all, what are the target customers who will adopt this payments, and how then we can leverage this, and what is the impact for our customers, so to speak. So I think there's a lot more to figure out, but where we are, I think this is a very good first step, at least, and we believe that this is a step in the right direction.
Thanks, Rashmi. Divyesh, to hear from you in terms of these bilateral tie-ups which are happening, right? There are a few that have happened before. Firstly, do you think this is scalable with different countries? Second, are there any learnings that we can pick up maybe from any similar tie-ups that have happened in the past? For example, Singapore tied up with Thailand on a similar model, right? So any views on that?
Yeah, so thanks, Geetika, and thanks to all the panelists as well as PCI. I think the couple of things out there which is most important in my view. The first one is obviously the corridors themselves are quite rich in terms of flow, right? So like you rightly mentioned, 80 billion plus. So there's significant amount of flow, and this has been one of those flows which has not been intermediated in terms of being more efficient, right? So you have you still have MTSS, and folks who've been around for 20 years or more than 2 decades in banking will tell you it works the same way, right? So the Benny is still going through the same old process, and obviously I can tell you 10 years back somebody said, oh, I'll send a message to my father for Middle East, and it'll come through, one small little 20, character text, and that has changed. So clearly, I think there has been great progress on the tech side, but I think on the money movement it was still kind of awaited. Although in India, I think UPI clearly has broken all the shackles, right? Anywhere to anywhere just moves very quickly. You can be on any app where your account can be anywhere also, right? So unlike other most developed markets, I think we've just leapfrogged a lot. So I think this was a natural outcome. It was just the logical next step, the cross-border side, right? And I think India, Singapore, given that we already have connect with them, right, in terms of using UPI to kind of even pay there, right? So all of those is already there. So I think this was logically, going down the path of RBI and MAS picking up next, right? More efficiency, etc. And if you ask me honestly, it's not just the remittance, right? If an NRI is sending money from Singapore to his parents' account in India, what stops him from doing bill payments for his father? Nothing, right? I mean, all of that is like massive. I mean, you can just see the multiplier effect, and that would mean obviously banks will have a serious issue, but efficiency is just kind of out there, right? I mean, somebody will kind of look at it and say, hey, the entire bill pay market for NRIs is huge, and it's not the money just comes and sits in a bank account, which ideally shouldn't. It should just go to the end user, right? Why should somebody log in and pay? So I think this is way overdue in my view, and I think the initial starting points also with Thailand and Singapore, there were a couple of banks that participated. I think the key will be basis the number of banks that participate. One, in my view, on both sides, right? If there are few players, the network effect will never kick in. So I think you'll need a lot of guys, at least the big three in Singapore, which is DBS, OCBC, and the likes, right? So those big three are, and we'll need all the private sector and SBI to participate. I think then the wheels will start moving. I think that was one. Second is if it's on similar platforms like blockchain. I mean, we've done. We've got one called Portier with JP Morgan also, which basically uses blockchain as technology for the purpose of doing similar remittances. I think if you have a similar tech platform, then you can do like very simple copy paste across geographies, right? So if you can do Middle East, US, UK, and Singapore, Hong Kong, I think you're done, right? You just have 5 markets, 90% on Pareto. You will basically hit a home run if you can get these 5 markets similar tech. And I think that's where the trick is, right? So if RBI can adopt a tech platform which can be replicated across markets, I think that's the key, because then within 2 years you'll be up and running, because these flows are already there, right? It's not that it's not there. You're not going to add some $30-40 billion or more flows. So the 80 billion will remain the same. It's just that it'll become more effective and it'll become replicable, right? So I'm sure MAS will pick it up with other markets also, other than just Thailand, right? There's Philippines, there's Indonesia, there are lots of them. So I think this is ripe for disruption in my view over the next 1 year. It'll start off with initial flow. Some banks will come in, but yeah, I think it's probably just going to take a little more time for all to participate. But the network effect is just massive. So it will definitely happen. And you never know. Somebody will say, right, I offer you 6 months free. There are enough of those, that will come through. But yeah, I think it's not the remittance. I think it's after the remittance is where the trick is. And I think most guys would have got it right by now, I'm sure. I hope that helped.
Yeah, sure. Thanks, Divyesh. So great points there. So I think to sum up our and I think we have Dharmesh now who's joined. Great. So Dharmesh, we were just talking about the entire pact that has happened, how that contributes to innovation. Great thoughts so far about how it's definitely going to contribute to the cost. What's going to make a difference is that the more the banks that can participate, that's going to be a key factor. Next level of innovation will be when you can actually enable the end use payments from cross border, right? Like Divya spoke about, like bill payments that can be made from cross border for the end use itself. So great thoughts coming in there. Your views, Dharmesh, in terms of the scalability of this model, and Divyesh mentioned if we can target like the top 5 corridors, we have it in terms of 80 to 90% of the flows. Your thoughts on that?
Yeah, so thanks, Deepika. Sorry that there is some technical issue, so it took a while to join. But I was listening to the conversation. To understand if this is scalable, we first need to understand how the India-Singapore Pact is working. And the key reason why this is the first pilot which NPCI is doing is because both India and Singapore have a underlying similarity in the payment infrastructure. So there is on one side there is UPI, and on the other side there is Pay Now, and there is a payment infrastructure and the network, and both of them use a virtual payment VPA. So that is the reason. One is you need to have a common platform. So while I agree that top 5 corridors should be an immediate target, but you also need to ensure that to make it scalable, one is how successful is this once it goes live, and how people are able to make real time use of that. I mean, if you look at it, and I am fascinated by this, because tomorrow if you're traveling to Singapore and you are not carrying physical cash, and you can actually use your net banking account or a wallet in India and actually start making payments there. So there is so much convenience there. Key to success there after this is launched is how do I manage the liquidity there, and how do I manage the FX, because this is a 24 by 7 system, small ticket payments. And if customers start facing issues there, then a lot of it will take a while to be scalable and to be implementable in different corridors. One more corridor which I can think immediately is Australia. So Australia has a similar platform called NPP, which also has a virtual payment ID, and they are piloting. But the other corridors like a US or a UK or in Middle East, I think that common infrastructure is still not there. So while India has UPI and NPCI, you still need a similar engine on the other side which supports a real-time payments locally, and with a common infrastructure. So like a VPI is a common infrastructure here, because unless that is there, the scalability becomes slightly difficult in the other corridors. So that's my view, Geetika, on that.
Yeah, thanks, Dharmesh. So we'll just sum up our first theme, which was largely around innovation. We've heard some great ideas in terms of, the underlying infrastructure needs to be common across the countries to make this a reality. The banks need to participate on both sides. The end user experience has to be managed, right? And the cost needs to be manageable, considering the FX, etc. Now, coming to our next theme around the larger cross-border payments landscape overall, right? Now, in terms of Shekhar, your views in terms of is all the innovation largely retail centric, or is there traction happening on the corporate front as well? Is this, I mean, that's been like the trend across multiple payments instruments we've seen. But overall, what do you think? There is enough on the corporate side as well?
I think we always start with a transaction, then we multiply this with 1,000, then with 10,000, and then we try to have the bigger part called non-individual transactions coming in. This corridor will also follow the similar path and should follow the similar path, because you are able to address the entire ecosystem, infrastructure, cost issues, and then to get facilitated. There's a big chunk which gets addressed, especially which I covered either on the trade or the larger remittances or the capital flows part. But it is important that the basic infrastructure is put in place, and then you are able to move forward. Think of UPI as an example, and the time it took to come to the level which is. So I remember October 2018, I think after almost 6 odd years of work and etc., it hit the 1 billion. Then I think October 2019, or I think 18, I think 19, 20, 21. So 19, 1 billion, 20, 2 billion, and 21, 4 billion. And that's the journey. But before 1 billion and the entire it took, and now we are thinking of the corporate part called as trying to ensure that you can have all the mandates now getting registered, and it's after a good amount of transactions which has been done. I expect a similar part over here. You will have amount limitation. You will have number of transactions, the people who can do it, and then I think each one of them flow further to actually move to the corporate side. But yes, there will be an important part that trade, travel, remittances flows between the two countries will grow significantly as I think establishes. We also seen that I think the UPI limits will also get increased over a period. Same thing happens on PayNow over there, and PayNow also I think facilitates something on the mobile number, or they call it what, NRIC and FIN, and besides VPA. It is important that when a scenario, I think I foresee very similarly to what Divyesh says, that linking payments with a smart contract on a blockchain, and as soon as the contract is executed, you will have an instruction to pay, and it is transmitted, and payment is released, and that will facilitate whether you are on the individual side and then facilitating the corporate side in a big manner. Uh, uh, it starts with retail, follows to the SME, and then follows to the large parts over a period.
Right. Yeah. I think that's the trend that we are also seeing on the domestic side, right? So, Rashmi, I think RBI tends to focus quite extensively on the entire trust bit, right? For them, even in their vision, they've spoken about building trust in the entire payments ecosystem. How does a non-bank, work towards something like that? Traditionally, in India, especially, trust tends to be largely bank-centric. How does a non-bank play in that space?
Yeah, thanks, Geetika. So, yeah, that's a good question because, yes, we need to have the customer trust, especially as a non-bank fintech, where a customer is entrusting, their funds to do cross-border payments, and cross-border payments inherently are complex and opaque, right? You never know, even the end customer never knows when the beneficiary is going to receive funds or what are the actual funds that the beneficiary is going to receive. So, I think we have in the last decade or so, as Wise, put in a lot of work to ensure that we've earned this trust, right? And there are two parts to it. So, one being that, like I said, we've always treated this as an ecosystem play, but very customer centric, which means that we always work with the existing ecosystem, whether it's regulators, whether it's banks, whether it's other third party players who are licensed to offer cross border payments. So we always ensure that whenever we enter a country, whichever country that is, or whichever jurisdiction that is, that we have the requisite licenses or approvals in order to process these kind of payments, right? So that's part number one. So whenever a customer comes to Wise to do any transaction, to do any cross-border payments, they know that Wise is actually approved by the regulator in that jurisdiction or is working with an approved payment partner for handling these funds, right? Whether it's a bank or whatever. Like I said, it's a third-party provider. So that's part number one of building trust. And if you see our journey today, we are servicing 11 million customers globally. We are a listed, player. We are a public company. We're listed on the London Stock Exchange, and we move about 5 or 6 million GBP monthly. Right. This has all been because we have kind of invested in building this network and building this trust. But that's just part number one. Part number two is when your customer actually comes to the platform, they need to know that this is a player or this is a service provider who actually has my best interests at heart. And there are a lot of design elements we've added to that effect, right? So transparency is very close to our heart. So if you actually come and let's say Geetika wants to transfer funds to the US, she will see on the transfer on Wise's website how much he's exactly paying, how much is the beneficiary actually getting, and when is the beneficiary actually receiving these funds. Today it might seem like norm, but think about it a decade ago when cross-border payments were taking anywhere between 7 to 10 days. You never knew how much the beneficiary was getting. You didn't know how much you were paying in FX, etc. That's a very, very remarkable customer design element or innovation that we've added. The other thing that you would also see on our platform especially is that it's almost always like we are suggesting the right way to transfer funds, right? So you'll actually go onto a site and you will see that the customer sees that there could be cheaper ways to transact for the same amount of money, and we'll actually name the other service providers as well. What I'm trying to get at is that we don't want to force the customer just to use us. We want to build that element of trust, saying that we are your trusted partner. So in fact, we are giving you, if you use us, this is what you'll need to pay. This is how much the beneficiary will receive. This is when they'll receive the funds. By the way, we are also a regulated player. But hey, if you don't like our pricing, there's another service provider who probably, is giving you a better rate at this point of time. So I think there are a lot of these design elements, apart from all the frameworks and all the network that we have built, that has enabled us to win this trust. And then, of course, when customers once use us, they like the experience so much, especially because we've also invested in instant payments, right? Now, that's an innovation as well. I think about 38% of our transfers globally are instant. So that customer experience then ensures that customers come back to us, builds that sticky element as well. And then it's like a word of mouth publicity that we receive. So I think there are 3 or 4 elements that we have ensured are in place to ensure that we build trust with the customer.
Great. Thanks, Rashmi. Now coming to the most critical part of it for any player, the margins and the money. Like all payment instruments and like India as a market as a whole, margins seem to be shrinking across, right? Like Divyesh mentioned, someone will come in and say, for 6 months I'm not going to charge you, and a lot of that has been seen in the past. So, Dharmesh, your views in terms of the margins, and can we maintain that if there is an ask from a regulator here?
So Geetika, this goes 20 years back when I started my career. So India has always been a volume market. So the largest players who were remitting into India at that point of time, which was wire transfers, exchange houses, uh, even at that point of time, their rates for India corridor were different, and for rest of the world was different. So India has been always been a volume market for 2 reasons. One is we are the largest inward remittance recipient countries in the world. So by the sheer market size, second is the customer behavior. I think we all know that the customer is price conscious. And we have to also understand, see, today customers, apart from the faster payments, and if you ask me honestly, in cross border, while faster payments do help, in my experience, I haven't seen more than 5% of the customers who wants their payments today. What they need is transparency. What they need is guarantee. So they are okay if somebody is sitting in US and they need to send money to India. You can tell them that the money gets transferred to your beneficiary day after tomorrow at this rate. Is okay. So that emergency of a payment which we do in India, where I need to pay you instantly, is not there. So what is important is, and what is happening, and I'm happy to see that due to this disruption, is that transparency is increasing. Because I still remember many years back, as even bankers, we have advised customers that if you have to send money, please add on $20, because I don't know what will get cut in between, how much time will it take, what effects you will get. And you as bankers also used to feel sad for the customers because you are not able to give that guarantee to a customer. Today what is helping with all this disruption technology is that customer now has a choice. And the pricing models have changed also, Deepika. So today customers know that there are entities, and Wise is one of the entities. Banks have also moved from an FX pricing to a fee pricing. So customers are given a choice. If you want to book your rate today, you pay $2 extra, but you get your rate today. If you want instant payments, then the customer is willing to pay the price. So models are changing, and what is happening is a lot of money which was erstwhile moving out of the banking or the formal channels is also flowing in now in the formal channels. So the market is also expanding. So there was a sizable amount of money, say 10, 15, 20 years back, which is to get remitted from the non-formal channels. Now I think that proportion is very small, because you can get instantaneous money. You are assured of your money. There is security there, and I don't see regulators having a say in pricing, because it is a market driven pricing. And all the players in the ecosystem, be it banks, be it fintechs, be it technology companies, I mean, all of them have a role to play. And the markets are also growing. So the remittance market in the last 4 or 5 years have still grown by 5-6% a year. So despite that falling margins, I think profitability is still there. Customer convenience is still there, and there is a lot more which now we can do with that set of customers.
Great. Thanks, Dharmesh. You mentioned, Dharmesh, different players have different roles to play. So, Divyesh, are you seeing collaboration as the way forward with all these players playing their part between fintechs, banks, money transfer operators? Is there something for everyone in the entire play?
Yeah. So I'll just step back a little. I think there just a couple of pieces which I thought I'll add, and then why there is a play because of that. So first and foremost is, I mean, the minute you talk of cross-border payments, you have sanctions that come in, right? So everybody has to screen a transaction, and then you need to know if it's not P2P, then you need to know the underlying, right? The purpose of remittance and all of that, and you need information. So I think that is the first piece that comes in, and that today breaks the entire flow, right? In terms of having it STP, that breaks it significantly on both ends, right? The remitting country and the beneficiary country also, right? So obviously, if there is I mean, banks have legacy platforms in the way they process, and I think some of the fintech guys have figured out a smarter way to kind of even do these screenings, although the responsibility is still with banks. So I think one is that piece comes into play. The second piece is, like I mentioned earlier, also there is enough opportunity for really providing a better experience. So, for example, let's say you know if Shekhar's son goes to US to study and he sends money today, right? It generally would take 2-3 days, and like Dharmesh rightly mentioned, there'll be charges from correspondent banks. Now, if there is a service provider that can provide remittance into his son's bank account in the US with JP Morgan within a minute, I don't think he would not do it, right? He would definitely want to go for it. So there comes a fintech play, and then you would have the bank obviously on both sides kind of using the rails, but fintech would engage with all the universities, because again, banks are not tied up with all the universities, but there are a couple of fintech players who've already tied up. There are corridors where they've tied up the entire student university legs. So the point I'm trying to make is, there will always be an engagement between banks and fintech players, because the customer experience is very, very different when you have both. The purpose for which the payment is made, basis which all these engagements would happen, right? And as I mentioned earlier, I think P2P is not the play at all. I think we're kidding if we are sticking to P2P. It's where it's going to finally land up is key, right? And this is a classic outward payment. Similarly, when you have inward for even smaller remittances, right, which customers get for even trade transactions, even those, if you can provide you can get the instant funds in, but you can't allow them to use because you don't know the purpose, right? So there is where you can use tech to screen the purpose of remittance and then let it go, right? And if it's recurring, then it's even faster, right? So some of those I think have already kind of happened, some of those are on the way, but in my view, this is inevitable. I mean, I don't think banks will have the agility to kind of go ahead and build stuff as quickly, but there is enough that a bank would bring to the table compared to a fintech and otherwise, wherein both will have to coexist. In my view, they will definitely have to coexist, because in some corridors you would have banks playing a significant role, in some where Dharmesh mentioned the underlying infrastructure may not be enabling. Like RBI has been really, really great in terms of being ahead of the curve, significantly ahead of the curve. So some markets where they are not, you will need a fintech to give you the last mile connect thingy, which I think is great. So actually, from a customer experience, it's just brilliant, right? I mean, you give a better experience, it's more real time, irrespective of markets, it's agnostic, it's just music to everyone's ears, in my view. I hope that
Great. Yeah. Thanks, Divyesh. So I think we've discussed a few key themes around innovation, regulation, competition, coexistence of all players, trust, the most important element, whether it's a retail play or a corporate play, and eventually the purpose, of course, is the most important element, right?
yeah.
And we do think there's money to be made overall, right? So I think it's the perfect scenario, perfectly set for disruption. So having said that, I think we'll go around the table asking for some crystal ball gazing and your predictions for how you think this market will pan out in the next 5 years. What are some of the other things that will come up? So Dharmesh, if you can go first.
Yeah, so 5 years, honestly, the way disruptions are happening, I think what will happen in 5 years is genuinely crystal gazing, because cryptos are a big challenge and a threat and an opportunity. Now, nobody knows. India has a different view on crypto. Some of the other countries have a different view on crypto, and that can change the entire dynamics of the cross-border payments. But having said that aside and say that cryptos do not make an impact here, I think 5 years down the line, cross-border into India will become faster, will become cheaper and more transparent, and that is for sure. Uh, Today, I think we would be at 20-30% of real-time cross-border payments. Hopefully, it will be reverse. You will have 70-75% of cross-border, at least percent P2P payments happening real time. Similar to what we have in India, where you want to send money to anybody any bank account through IMPS, any FT, RTGS, it is real time or a near real time. And I think that is where cross-border payments will be headed in the next 5 years, with a lot more transparency. What Divyesh says or what the other speakers also said is that the crux here is that one wrong payment, and this is cross-border. So there is anti-money laundering checks to be done. There is a one bad payment in the system, and the entire ecosystem gets shaken, and there are frauds happening. So I think, and which is what I think banks are working very closely. So today, if you ask me honestly, there is technology to in fact enable 100% payments real time on cross border. What is stopping? 10 years back, there was no technology, but today I have. So when I meet vendors, when I meet partners, I think that IT solution is there. That is not an issue. Where I think banks and the different parts of the ecosystem are still trying to find a solution is how can I make it risk free, and how can I ensure those checks are there. So even a single payment which was not supposed to be done is not allowed. And I think hopefully that will get fixed in the next 4 to 5 years, more from a compliance tech perspective. So that, and possibly 70-75% of payments moving real time in next 5 years, unless cryptos and all disrupt the thing completely.
Great. Thanks, Dharmesh. Rashmi, if you want to take a shot at this.
I think in the next 5 years, and I agree with Dharmesh, right? Assuming that there is no other disruption that we are talking about, I think it's going to be more of a play of instant payments, because see, in at least in the domestic scenario, at least in India, now we have gotten used to this whole payments being faster because of UPI, INPS, payments being instant, faster. So I think that same expectation from customers, whether it's retail or business customers, will flow into cross-border payments as well, right? So even cross-border payments will need to catch up, and whether that means more investments in tech, IT solutions to ensure that more of the transactions are STP, I think that's where we see the industry growing. But one of the other things that I also want to touch on, and I think Dharmesh mentioned, that is transparency. I think that's also one of the big themes that Wise believes in, and we do believe that cross-border payments still have a long way to go in becoming transparent in terms of FX costs, etc. But that's just because of the ecosystem will need to catch up to make cross-border payments more instant, faster. There'll also be an element of transparency that comes in because now customers will have the choice. So I think that's another big theme that we see shaping up in the next 5 years.
Sure, great. Shekhar, you want to go next?
5 years is a long time as far as ecosystem is concerned. We have seen what has happened in the last 5 years in India. We have been leading the world, and I expect the world to get transformed as we also evolve. So I see a significant transformation as far as payment. Second, the mode of payment, and third, the way it is going to get settled across. We need to be a bit more dynamic. That's what technology will permit. The only thing which will have to be, and I think I'm more optimistic, which get sorted would be multi-entity participation, automation of capital controls, enriched formats to accommodate, I think, future innovation by linkages participants, which ensures that I think Divyesh covered that as soon as the remittances come in, it should hit the account. I think that is the objective. We want to probably achieve it in 12 months' time. But as the volumes will increase, you will become more borderless with automation of capital controls rules. It has to be a different world as far as the design of cross-border payments is concerned, and the design of cross-border payment systems is concerned. The payment revenue pools are different across markets, which also implies that the level of disruption or the nature of disruption of existing pools is likely to be different across, but it evens out, according to me, in a good 5-year frame. So overall, exciting times, a lot many things which will happen, and a lot many areas which will get transformed. And I'll keep my fingers crossed that regulators across, it is not only Indian regulator, the regulators across will be facilitating the capital flows much better. And yes, I think I do take crypto as an example, which tried to do it without regulations, rightly to be regulated, but come as an alternative to whatever happens on the physical payment side, which we're trying to solve on the cross-border side.
Thanks, Shekhar. Divyesh, your views?
Yeah, so I think I mean most of them have covered the important elements, which I guess we'd like to at least see happening or evolving. I think two, three things which I believe will happen in a very large way. One is I think CBDCs will be big. So central bank digital currencies will be in a big way, especially on P2P. My view is that again, money may not land in a bank account, but may go into a CBDC because that may just be the way student remittances may also happen. So I think that is a massive opportunity. I think in my view that should happen. Second is I think data sharing by banks in terms of a customer will start happening, and the pre-screening will be huge. So for example, if Shekhar is a beneficiary of receiving funds in his bank account, then my view is that knowing Shekhar in terms of the KYC and the kind of flows that have gone through his account, that data will be shared by Kotak with various banks in the ecosystem. And I think therefore screening will become far more stronger, and hence it'll be easier for you to do more straight through even for commercial transactions and not just P2P. I think that's where the trick is. If banks can collaborate, and if it's driven by central banks across, I think this is one of the biggest opportunities, right? Because the color of money is the same irrespective of where the beneficiary has a bank account. It's just that now each bank does it every time. It's akin to like KYC, right? I mean, each bank kind of does it every time. So if you know a customer well, and if you can share that data point with others, I think that's where the breakthrough will happen. Whether it will be done by fintechs and or led by other service providers, I don't know. But I think that's the big piece. I think that will kind of shift the scale. Otherwise, most of it is a Me Too kind of thingy, right? You can add price points and keep on playing around, and you never want to go below zero also someday. But that's the trick, right? So I think if these two things happen, then it's massive. It's just massive in terms of scale that can come in. So that's my view.
Perfect. So I think we are just at the top of the hour. We will look to conclude now. So I think great thoughts. So key takeaways from my side. I think watch out for crypto, CBDCs. How do we build more transparency, and how do we ensure data sharing in a more regulated fashion? So let's take that away from this session. But all said and done, I think it's an industry and it's a sector disruption. Thank you, everyone. I'll just quickly check if we have some questions here. We have just about 5 minutes, I think, to answer the questions. Uh, there's a question. Divyesh, you had mentioned screening. So there's a question around how, if at all, will this bring a shift in KYC norms? Any thoughts around specific
Yeah.
pacts like these and the impact on KYC?
See, KYC norms will. I don't think KYC norms will change because that's more knowing the customer and opening bank accounts, right, or any kind of relationship. So those will continue to remain. I don't think that will change. Like I said, it's only if you can use data to share with other banks in the ecosystem. I think that's where the trick is going to be on. How do you kind of know the customer across the ecosystem within banks, and therefore when the money comes in, you're at least sure of the color of money, and you can instantly credit. I think that's where the trick will be. But I think it's more around like CKYC equivalent. If you have sharing of flow information, I think that's more important. If that can be done, I think it'll be far more quicker.
Okay. Um, I think that's it in terms of the questions. I don't. Okay, there's one last question, and this could be our last question. Neobank is offering zero forex fee on withdrawal. If the same happens to be to the CBP, what would happen to the margin other players count on? Dharmesh, do you want to take a stab at this? Essentially, again, speaking of margins and how neobanks are posing some specific cases.
See, people can offer zero fees, but it is not sustainable. And these are marketing gimmicks we have seen. New age players can start with that, but at some point of time, it evens out. and banks and even the larger fintechs have made huge investments in infra. So the entry barriers are also not small in this business. So while I can see this minor price related campaigns and promotion happen, but longer term people know that you need to keep investing into checks, security, or payment infrastructure, and that requires money, and that is not sustainable with those zero fees and zero charges. So I'm sure customers will pay. Some of these players will come and go, make some impact for a while, but the larger players who are there and who have built the infrastructure will continue to survive and sustain.
Perfect. Thank you, everyone. I think we'll look to conclude here. Thanks, everyone from the panel. Great views.
Thank you.
Thank
Thank
you.
you, Geetika. Thank you,
Thanks.
everyone.
Thank you.
Thanks, everyone.
Over to you, Garima.
Yeah, so thank you so much, Geetika, and thank you to everyone for such an engaging session. A special thanks to all the panelists and, of course, Geetika, again, our moderator, for being with us today and making this possible. And another thank you goes out to all our attendees and or everyone who was a part of this platform who are here today. Thank you so much. Thank you for the questions and stay safe. Bye-bye.
Bye.
Thank you.
Thank you.